Hello, this is Ahura. We'll be with you with the global economic outlook in the week ahead. The last day, today is the last day of the Munich Security Conference of 2026, which is annually holding in Germany. As you know, that's just like annual summit and a meeting. While we have a meeting there, and there are many talks about the geopolitical tensions across the world, especially in the Middle East and in Ukraine, the market risk is still high. About the geopolitical tensions, one of the main market mover of previous week, and which is going to be the one of the another main market movers in the week ahead with ongoing geopolitical tensions, while on Tuesday, we are expecting to see very important negotiations first between US and Islamic Republic based in Iran in one hand, and on the other hand, between the US, Ukraine, and Russia about the ongoing their meetings and negotiations about the Ukraine tensions. That's why the Tuesday will be a very important day. Any negative reactions or any negative results from these meetings, it can affect it can affect all the social all this financial markets very hard and very sharp, especially the energy market. However, the positive news from these positive news and the reaction and the results from these meetings can put the pressure on the energy market and support the stock markets across the world. That's what it is Tuesday. As for geopolitical, day will be very important in the week ahead. However, last week, besides these geopolitical tensions, we had four very important economic data as well. One from Germany, one from United Kingdom, sorry, one from China, and two very important data from United States. Starting with we had other data also. I mean, the many retail sales and many other data also last week. But the main data they were these the topics that I mentioned. That's why I'm gonna review shortly about them and under only. As for economic data, inflation numbers in China for the second month in a row was positive in both monthly and annual scale. However, the inflation increased by 0.2% in both scales on monthly and annually, less than expected. But for the very first time in a month, we saw both of them. I mean, both monthly and annual inflation above the zero on the positive area for 2 months in a row. That was the first time. That was something that we saw for the very first time in a month. That can be the positive news for the Chinese economy, slightly increasing the numbers in inflation. Will be fine in January, especially as we know that in February also because of the Chinese New Year holiday, we have more demand for the products and services that can increase again the prices and help the inflation to stay above in a positive territory for the third consecutive month. At the same day, we had labor market data from United States, which is supposed to be published week before, but because of the shutdown, government shutdown, we saw these numbers last week on Wednesday. The government shutdown still continues, and that has actually it is a particular shut down, but still it was a shutdown particularly, and that can affect some part of the data and economic information in the week ahead as well. However, the unemployment rate fell to 4.3%, amazing numbers, which made Mr. Trump to had a post in his social media, Truth Social, and talk about the amazing labor market that we have in the United States. However, if the numbers generally shows that we had a less jobs comparing with the previous year, but as mentioned before, there are a very different kind of the explanation about the labor market right now, about unemployment rate and many others. We have to a little bit update about these descriptions. However, the unemployment rate fell to 4.3% with 130,000 newly created job and also 170,000 newly created job in the private sector. Amazing numbers, while the average income increased by 0.4% monthly and 3.7% annually. And the labor market participant rate increased to 6.5% from previous 6.4%. All these numbers, 62 from 62.4% to 62.5%. All these numbers shows that labor market in the United States, even we had some cooling numbers, we saw some cooling reaction in the data, still the labor market is very strong and moving forward. This is what we can understand from the US labor market and amazing numbers that we had there. Later, next day, on Thursday, we had the GDP numbers, manufacturing, industrial production from the United Kingdom, and following weaker economic activity, we had other economic activity, we had general economic activity also less than expected, and again, that can confirm the expectation of 25 basis point rate cut in BOE's next meeting. That's why we can say that the weaker than expected, and generally the weaker industrial and manufacturing production by minus 0.9 and 0.5% can increase the chance of the rate cut for the next meeting of BOE. And finally, on Friday, we had inflation numbers from United States, the most important number to watch and talk about. And surprise again, and so, with the CPI increasing only 0.2% on a monthly base and falling from 2.7% to 2.4% in January. That was amazing and a positive number for the US market generally, but still the core inflation was 0.3% monthly and 2.5% annually. Still says that we should be a little bit more careful before we go forward and see the real reactions. In Russia also, we had a central bank meeting where the Russian Central Bank of Russia, or CBRT, cut the rates by more than expected. Let me find it. Where was that? The central bank, cut the rates by more than expected from 16 to 15.50, which was supposed to lower just like by only 1%. I mean, not to lower, sorry, in this meeting, and stay unchanged at 16%. But with the lowering by 0.5% or 50 basis point to 15.50, surprised the market and shows that because the actually inflation numbers, they were in both inflation numbers and labor market, they were lower than expected and generally in very low levels. So that's what happened there in previous week. And in the week ahead, talking about the week ahead a little bit, should be more careful in a trading, mostly not because of the economic data, because of non-economic data. What does it mean? The Chinese market next week will be holiday because of the Chinese New Year. At the same time, we have we have United States holiday on Monday as well, and this is Washington's birthday. That says that the market liquidity in a week ahead will be in a very lower levels. I mean, the level of liquidity will be in a very less than compared with the previous week and the other weeks. That's increased the market risk, and that increased the choppy movement of the chance of the choppy movement in the markets. So we should be very more careful about the economic, about the market movements in the week ahead, and that can put us in a much more cautious condition. So be careful about your trades. Think twice before opening or closing any position, and think about it more. You should think more and more deeply about the levels, such for stop levels, and also the take profit levels. That should be considered more cautiously. As mentioned, the lower liquidity in the market always increases the risk of the choppy movements. However, on Monday, we will have the GDP numbers from Japan for the fourth quarter, which is expected to increase by 0.4% quarterly and 1.6% annually. Generally, it can be the positive numbers, but I don't think that we can reach this. That's a problem. Then on Tuesday, where the market will be washed on a UK economy with the unemployment rate expected to stay unchanged at 5.1%, shows that still the labor market is weak, still need the support. But as mentioned, unemployment is supposed to stay unchanged at 5.1%, but other labor market data from United Kingdom probably will show more weakness in the labor market and support the idea of the rate cut for the next BOE meeting. At the same time, on Tuesday, we will have the inflation numbers from Canada as well, which is expected to increase by 0.1% monthly and annually stay unchanged at 2.8% or slightly fell by 2.7%, but still it's going to be a much higher than the central bank target. And that's why probably we will better to wait a little bit more. And the Central Bank of Canada will hold the current rates. I mean, with these numbers, we expect to holding the current rate, and the next rate cut probably will be in the second half of the year. Later on Wednesday, while the market focus will be on the FOMC meeting minutes, which will be very important at the end of the day, but still during the day, we will have the central bank meeting in New Zealand, where we expect to see the interest rates to stay unchanged at 2.25%, and the market will watch that very closely. 2.25% is the level that most probably will stay there. The RBI's rates will stay there for a little bit longer because the labor market condition in New Zealand is somehow accepted in acceptable levels. Inflation is somehow under control. That's why the central bank will probably think about that, giving a more chance to economic movement before making any decision. That's why we expect to see inflation interest rate to stay unchanged at 2.25%, remain unchanged for this meeting and a week and the next meeting as well. Later, we will have the inflation numbers from United Kingdom, where we are expecting to see the inflation to fall to 3.1% or 3% around this from previous 3.4%, and supporting the idea of holding the current rate for a little bit longer. That's what we can. Sorry, to cut the rates. I'm sorry. That's increased to cut the rates for 25 basis points. I missed with U.S. Central Bank. To see the inflation rate falling towards 3%, that increase the chance of the rate cut for the next BOE meeting. We know the previous week, in the previous meeting also, the votes, they were so close to each other at the 4 against 5 votes for rates cut, and finally the central bank with the 5 votes for holding the current rate. They held the rate at 3.75%, but with these numbers, with the weaker economic data we saw previous week, with the interest rates, with the inflation rates falling towards 2%, we're expecting to see more dovish policies from the central bank, most probably in its meeting. Durable goods orders expected to fall by 1.8% in December after 5.3% increase in November, generally mostly because of aircraft orders, but with the less aircraft orders, with the less orders for the transportation sector, we most probably will see overall durable goods orders to fall by 1.8%, but excluding the transportation and defense, most probably we will see 0.1 or 0.2% grow in orders. But as mentioned, FOMC meeting minutes will be much more important on Wednesday. Thursday, while the unemployment rate in Australia is supposed to increase to 4.2% from previous 4.1%, can increase. This can increase the chance of holding the current rate much more, because Australian the Australian Central Bank hiked the rates previous meeting, and mostly because of the inflation numbers. And now when we see the unemployment rate is getting slightly weaker, we can say, okay, with the inflation, while it's still a concern, but it's not such a big concern. While on the other hand, you can see the weaker economic activities or the labor market improvement, you can say, okay, now it's the time to say either to cut the rates, either to hold the rates, and not going towards some more hawkish policies. In the United States, housing market data, including then we have the housing market data, pending home sales generally. Housing market data this week, we're gonna have the pending home sales, we're gonna have the new permits and all of them. We're expecting to see a little bit positive data from housing market generally. However, on Friday, the market will focus on US inflation numbers, but during the Friday we will have the retail sales from United Kingdom, which will be more important to watch. And I think probably we'll see the less retail sales, and that can increase the chance of rates cut. However, the markets mostly will watch two numbers. One is the PMI numbers from across the board, European and American economies generally. We are expected to see slightly weaker data that's going to be in the flash numbers of February. However, the market will focus on the core inflation in the United States. We are expecting to see the personal income and spending both to increase by 0.4% in December, while the core inflation, the core CPI, and the core PC price index, the core PC price index and PC price index, both of them, we are expecting to see at 2.9%, with one difference. The PC price index supposed to increase slightly from 2.8% towards 2.9%, but the core PC price index is supposed to stay unchanged at 2.9%. What these numbers will tell us. These numbers can confirm once again that the inflation is still a little bit higher than the market expectations, and that's on the quarterly for the fourth quarter to stay unchanged at 2.9% of core inflation, but on the monthly scale in December, we expect to see that increase from 2.8% to 3%. And these numbers together, putting these numbers together, will tell us that the inflation, if we saw these numbers to happen, it can tell us that the inflation is still high. And while we see the higher inflation, again, we can expect the chance of the rate that remain or holding the current interest rates at 3.75%. The chance of this can increase towards 94%. Let me show you the same this one I'm talking about, the holding the current rate between 3.50% and 3.75%. During this week, the previous week, it fell towards 90% almost from 94%. With the expected inflation numbers, we expect to see again this one around 94%, which means again more hawkish tools from the central bank in United States in Federal Reserve, and that can increase the chance for supporting the US dollar and yields. That's the most important numbers we are expecting to see in the economic calendar. Let's check the charts and see what's going on in the chart and what we can expect from the charts. Looking at the charts, and the market risk is still high at 20.75% between 20 and 21. That says that the market risk is still really high, and this higher risk can put the pressure on the risky asset. However, for the US dollar index, this higher risk against weaker economic data, they somehow could finalize and normalize the price for the dollar index and hold it around 97. But with the higher inflation that we're expecting to see during this week, at the end of the week, we're expecting to see the dollar index to slightly increase again above 97, but not sharp increase. In the 97 area, this is what we're expecting to see. Despite the higher expectations for the dollar index, we expect to see the gold and the silver price also to hold positive and remain above, for the gold above $5,000, and for the silver above $80, most probably. Now it's $77, but we are expecting to see the silver price to move above $80. That's what we're expecting to see because of two reasons. One, geopolitical tensions and higher risks in the market, which increase the demand for the safety havens. And on the other hand, the higher inflation numbers, which is expected to happen, this higher inflation numbers means higher for longer, which is going to be the negative for the stock markets. But while it can support the dollar index, at the same time, it can support the demand for the risky asset as well. That's why we are expected to see positive reactions from the gold and silver market. That's what we're expecting there. As for energy market, WTI or oil price is mostly depend these days on the geopolitical tensions as the economic data. What we saw on the economic calendar on one hand, and on the other hand, what we saw with the IEA, EIA, and OPEC monthly report last week generally we can expect, if we looking at just only economically, we are expecting to see the oil price around $56-$57, but geopolitical tensions still keep it in a demand, keep the oil price in a demand, and even thought the week slightly the week ended slightly lower compared with the last Thursday and Friday, but still $60.60. That's very high number compared with the 55, 56 normal supposed to be. That's a very high level and a high price for the oil, and we're expecting to see if on Tuesday we saw some progress in the talks and negotiations between the United States and Islamic Republic on one hand, and United States with the Russia and Ukraine on the other hand. If we see the positive news from these negotiations, we can expect the oil price to see lower. But if we don't see the positive reactions from these meetings, we expect to see again the oil price to gain above $65-$66. That's all depend on the geopolitical tension. So this data says that the oil right now mostly reacting to the geopolitical tensions than economic data. Looking at the stock market, S&P 500, Nasdaq, and the Dow Jones, all of them, they are still under pressure. Mainly, the concerns over is that the AI on the and tech stocks, they are stable enough and they're profitable enough, or again the concerns that whether they're overpriced or not. These concerns in one hand. On the other hand, the higher geopolitical tensions, all of them, they are together can be the negative news for the stock market, and we are expecting to see these side movement with the lower tendency for the S&P 500, Dow Jones, and the Nasdaq to continue, especially if we see the geopolitical tensions in a higher levels. We can see higher pressure or more pressure on the stock markets as well. And finally, in the cryptocurrency market, the Bitcoin, despite slightly closing higher than last week, above 60, around $69,000, but still, in a bigger picture, the cryptocurrencies and the Bitcoin still, they are in a negative territory with the Kevin Warsh as a feature, possible feature in one hand. On the other hand, the risk in the market about the future, especially for the stock markets, that can increase the risk in the market, and risky assets, including the cryptocurrency assets, including the cryptocurrency market, can be under pressure with these overall expectations for economy. So for the Bitcoin also, we're expecting to see the prices between 65 and 70,000 for the next week. That's what happened previous week and our expectation for the week ahead. Hope it was useful for you. Talk to you again soon. Have a good day. Bye-bye.